Wow, another disappointing week. And we should have known this, that Alibaba cannot stay above 100. It was down over 5% today, almost 6%, closed at 94.19. It went down even more after hours. I figured that there's no way that this could possibly stay above 100. And then we have earnings next week. And you know what happens? The last 5 earnings report, the stock dropped. It sold off the day of earnings. So earnings is pre-market on Friday, November 15. Let's just prepare for the worst. Because look at what happened today. Why did it go down? China's stimulus plan, not enough to ignite stocks. So I want to show you this person, Bob Elliott. He pretty much summarized the whole China stimulus. So let's go ahead and read his thread. Accept it. Meaningful China stimulus isn't coming anytime soon. Chinese policymakers remain almost laughably focused on the wrong policies at the wrong size, with today's debt swap announcement projected to save 0.08% of GDP in financing costs annually. There was some hope that the Chinese Standing Committee meeting this week would result in meaningful policy outcomes to support growth ahead. All that came was reaffirmation of a debt swap program meant to bring hidden local government debts into the light. But this is all teeny tiny compared to even the total government issued at hand. This is much more about establishing control of local government activities than it is about making an economic impact, with the iron rule holding much more emphasis than the 0.08% of GDP annualized debt service payment savings. Many had hoped the meeting this week would have delivered something substantial in terms of economic stimulus. All that came was a recognition that the Chinese government debt remains relatively low and there is room to expand it, with some acknowledgement that it may come next year. If there was a meaningful actual improvement in economic conditions or expectations of future supports, one of the first places it show up is in domestic Chinese bond markets. And yet, benchmark yields remain at all-time lows. Further, the exchange rate has sold off in response to this news and is now testing post-Trump election lows. Really, all the lift has come in the equity markets, and with the onshore equities as a function, the relatively aggressive steps support the domestic market for sentiment reasons. But even in the offshore markets, it's clear enthusiasm from the initial pop has faded. China has a deleveraging problem, and policymakers remain focused on efforts that are focused on sentiment in asset markets and efforts to control local governments through debt swaps rather than significant restructuring of bad debts and fiscal stimulus to support consumption. At this pace, Chinese policymakers are falling further behind in their debt problem, pushing off even the hint of possible fiscal supports well into next year. And until their policy focus meaningfully changes, the long hope for Chinese bazooka and rebound remains elusive. Wow, all the headlines, bazooka stimulus. And what did it do? Absolutely nothing. So this was one of the headlines. China's stimulus aims to boost consumption, top official says. Vice Finance Minister says fiscal moves will be quite large. Lawmakers expected to unveil fiscal package in early November. And then this, China moves to ease debt concerns, but again, holds off on stimulus measures. Time and time again, how many more times are we going to get misled? Oh, don't forget, now that the stimulus is over, people are relying on earnings. Earnings report comes out Friday, November 15th. It usually comes out Thursday. Don't know why they changed it to Friday, but people are expecting it to go to the moon, just like every other report. But if you have looked at the last 5 earnings report, what did it do? It either sold off or stayed flat. So the last earnings report was disappointing and it did sell off, but then it got back to even. So it was flat. But the last 4 before that one sold off quite big. So the one I remember is actually in earlier this year. Let's see here. It was in February. You can see right before the earnings reports, it went up to 78 and then it dropped to a low of 73. And then it sold off lower to 70. And before that, so that was February. Before that was November. Okay, this one went to a high of 87, 83. And then, wow, not good. Look how much it dropped to a low of 78 and then continued to go down. So again, is this time going to be any different? I don't think so. So don't put your hope into these earnings reports. I should have got out a long time ago, but I stayed in, just like everyone else that's in, thinking that it's going to go up because it has a low PE ratio. They're doing share buybacks. It's oversold. But it's not based on fundamentals. It's all about political risk. And now that Trump is in office or is going to be in office, it's really not going to go up. It's quite sad that all of the US tech stocks are making all-time highs while these Chinese stocks are selling off every day. Yes, it did go up to 117. And you know why it went up? It wasn't because it had good earnings report. It wasn't because it had a low PE ratio. It was because of headlines saying a bazooka stimulus coming out. Ooh, they really misled investors once again. And what happened? Selling off. So until they come out with another headline that says bazooka stimulus, Alibaba is not going to go up. I've been watching Alibaba and I've been in Alibaba for the last 4 years. Every single event has been disappointing. Every single earnings report has been disappointing. So why am I not out of this? I don't know. I am delusional, just like majority of the Baba shareholders. Let me know. Do you really think this stock can go up to, let's say, 150? Is that really too much to ask for? And on X, people are saying, yeah, the stock is going to go back to 300. You know why it went to 300? This was during the pandemic. This was when every single stock was going up. So you can't really account for that. And they're also saying it went up during the Trump administration. I don't know. I mean, you got to think about 2020, the pandemic, right? Went to a low at 180. So a lot of stocks, like I said, every single stock went up. So you can't really count for this. So before that, let's go before 2020, the stock was trading like about 190. It's political risk and people don't want to accept that. Let me know. What do you guys think?